This is our Forex blog for October 25th, 2013, and one of the easiest ways of trading is to use our currency indexes. We've actually created an index, just like the Dow Jones, S&P 500, but of each individual currency. So you can see what all the euro pairs are doing, all the pound pairs, all the yen pairs, and all the dollar pairs. There's 4 more: Swiss pairs, CAD pairs, New Zealand pairs, and Australian pairs. And you can see a wealth of information. Most of the time, price does not go beyond our containment bands. So when it hits the lower bands, likely to bounce. When it hits the upper band, likely to bounce down, down. You can see here, down, 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 down. I mean, it's an extremely accurate tool. Every once in a while, it'll go slightly through it, like you can see here. But the majority of the time, price hits it and either goes sideways or bounces, as you can see here in New Zealand. So if you know the likely trend direction in the future, for instance, here in the euro, you can sell it versus, I'm going to link them all together, you can sell it versus a currency that's likely to go up. Oops, sorry, I hit the wrong button. Alright, so this one's likely to go down. The dollar was weak and just broke out from beneath to above its hourly moving average here. The only downside is the longer term trend is down. If it was up and maybe the euro's longer term daily, weekly, or monthly trend was down and it was at its upper band, it would be even more likely to fall. But at 5 o'clock right here, there's a pretty good chance the euro dollar will fall. So you basically, and I'm just going to bring this up on a 5-minute chart. You can use tick charts, range charts, but at 5 o'clock, it's pretty likely that the euro dollar will fall, and of course it does. You can see also on the chart here, it hit the high of the day 3 times, pulled back, went up, failed, and you can see it fell. Pretty nice 25 pip drop, rallied up, fell again. You can also use our Forex trade signals to decide when to get into a trade. If you see the currency indexes and you think the currency is going to go down, wait for a sell signal on the Forex signals on your range charts and take those trades. Here's our trade signals from today. And so if you were looking for a possible reversal in the euro dollar, you can see coming up to 5, there are 2 sell signals right before that. So, use the currency indexes to decide which direction you're going to take a trade in, and then wait for the signal to show up, and then take those trades. And you can just use the Forex signals yourself. You have a loss here, small win, small win, small win, loss, loss, win, 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 win. But let's just say small loss here. Win, small loss, win, small loss, win. Pretty much near break-even trade and small win. But you can see the majority of the trades are wins. I've spent months and months and months. This is over 10,000 lines of code, and it actually tries to pinpoint certain high probability patterns of different types. Fibonacci profit targets, for instance, if you draw your fibs from here, more than likely the fib targets are down here, and that's what this one is. This is a counter trend method. Once you have a low at a fib level and it retraces a certain amount, comes back down with less statistical weakness, we try to buy the double bottom. The trend's clearly down, so we're focusing on sells. And then this is a new pattern I put in today that if price does certain bar patterns and the momentum shifts from down to up, it will flip. I'm still working on that. It doesn't have the highest win rate, but it did nail that one there. So let's remove this, and we'll go over some other examples using the currency indexes. Now when you see a currency is trending up, brief breakdown, comes back up, really doesn't make a significant higher high, pulls back, does not get a bounce off its hourly moving average, it's pretty likely to fall. And so you can anticipate future trend direction when you have an area that gets hit and it's going sideways. You have a nice little wedge pattern right here. And I'm going to hit the plus button to zoom in on this. So when it breaks from above to below the hourly moving average, and you can see it barely made a higher high earlier, it's pretty high probability. So you can look for a sell in the pound here, and which currency would you want to buy? Well, the euro's falling, so you wouldn't want to trade two weak currencies. You don't want to buy or sell two strong currencies against each other, or buy or sell two weak currencies. You're likely to get choppy price action. The dollar is the strongest of these, so but it is near its upper containment band, so it doesn't really have that much room to run. Most times price reverts at that area, but the pound could fall. If the dollar goes sideways and the pound falls, you're still going to make money in the trade. So that's around 750. We'll bring up the pound dollar, and it wasn't the biggest trade in the world, but you can see a nice little wedge pattern on the chart there too. You're looking for a sell, and it did fall about 18-20 pips. Then it retraced back up, and then it fell again. So a lot of times you'll see the pound fall, it will retrace back up as the dollar falls, and when they both resume their direction, like this one's retracing back up, the dollar's falling. Notice the perfect oscillator. If the trend's up and the perfect oscillator is at the lower band right here, it's probably likely to revert back in the direction of the trend. And with the pound, perfect oscillator is at the upper Bollinger Band, and that means it's likely to reverse in the previous direction. So close to 9 o'clock, we're looking for a possible sell, and so sometimes these happen right away and you make 20-30 pips within 5 to 10 minutes. Sometimes they take an hour, but coming up to 9 o'clock, we're looking for a sell. And so if you got short right there, somewhere near the open of the 9 o'clock bar with your stop a few pips above the high, it did go sideways for an hour, but never even came close to stopping you out. And then price, fell from around 90 all the way down to 50. So it was a 40 pip drop over the next, 2 hours. Really, you had to wait an hour, and then it fell 40 pips in 1 hour. But the point is, the currency indexes, if you know how to trade, there's so many different ways to use them. Double tops, double bottoms, trend line breaks, Fibonacci profit target levels. For instance, if you draw your fibs on a swing, the fib target's very likely to reverse. You'll see that over and over and over again. In all these methods, I like to try to keep the method simple, but I use all these methods myself. If the fib target's very likely to reverse, So let's hit the plus key to zoom in on this. Especially if it hits the plus key and the perfect oscillator is at or above the 80 level, it's even more likely to reverse. So unfortunately, it's not at an extreme. Sometimes you have multiple different tools all giving the same pattern. You already saw the 5 o'clock euro-dollar sell, but being at a fib target adds to its probability. You can also draw trend channels on these, and then once you have 2 or 3 levels getting hit, you can project it from the high, and anytime price is kind of at, and sometimes the trend is up, sometimes it goes a little bit through the upper levels there, but when it's at or above the upper levels, you can look for sells. And you can use this on any time frame. You can use Euro currency index on 15-minute, 30-minute, hourly, 4-hour, any 5-hour if you want, anything. 5 minutes, 6 minutes, 7 minutes, 8 minutes, daily, weekly, and monthly also work. So you can use multiple time. If you like multiple time frame trading, if you're a very advanced, sophisticated trader, you can do that as well. If I discussed exactly the way I trade, I think I would turn off 90% of traders, especially new traders, because they would find the methods too complicated. But if you're an experienced trader using multiple time frame and you have 2 to 5 monitors, there's so many ways you can use our currency indexes and look at and draw fibs off of multiple time frames and find when clusters of Fibonacci areas all hit at the same time. It's almost golden. When certain patterns happen on multiple time frames, I just trade ridiculously much bigger size than I normally do. All right, so let's take a look at some of the other currencies on here. Here, the Australian's going down, comes back up to the point of control, major resistance area. You could just simply draw a trend line underneath the lows here when it's in this little consolidation area and wait for a break, which happened, a little bit before 11. So the Australian, you can see the daily trends for the most part down, weekly trends down. Which one is likely to go up, coming up to 11? Well, you can see the Swiss has a very strong weekly trend and monthly trend. The only problem with this is it's already heading up. You can see it went up a considerable distance coming up to 11. So I would be very careful in this, because a lot of times weak currencies, when they hit the hourly moving average, they'll bounce off of them. But the longer term trend is up. That's the only thing it has going for it. So if you were to go bar by bar into the future here, and if you see the Australian breakdown, all right, so the Australian broke down here, and the Swiss is still inching its way up. If the Swiss goes sideways and the Australian falls, you're going to still make probably 10 to 25 pips on the trade. If the Australian falls and the Swiss keeps going up, you're going to find 20 to 50 pip wins. That's just the way it works. So you watch it bar by bar. But we'll take a look at the Australian Swiss. We're looking to sell it coming up to 10. And as you can see here, it was already falling for an hour and a half before that, but it didn't really fall that much. The Australian was kind of going sideways, and the Swiss was going up. And so we're looking for a sell at 10. You could sell the bars here with your stop above the high, and just simply get out when it kind of breaks the trend line over the high. The key to trading is small losses and bigger wins, and that's why the currency indexes work. At the most basic way of using it that I teach each day, the most easiest way to learn, it works for no other reason than you're trading the ones that are most likely to trend. And so if you're wrong, you're always going to lose a small amount. That's the key to trading, no matter what trade you take. You use a 6 to 12 pip stop. And when you're right, you frequently will going to catch 20 to 50 pip wins. In this case, 10, 20, it fell 25, 30 pips. You probably would have made 22 pips on this with an 8 to 10 pip risk. Anytime you make 2 times more than your risk and you're 50% or more right, that's basically the key to trading right there.